Welcome to Lucas Invests, making money simple.
Have you seen the global stock market crash overnight? Trillions evaporate instantly. The media panics, retail investors sell in terror, and everyone wonders what disaster hit the economy. This crash wasn't a failing economy. It was the unwinding of a secretive, multi-trillion-dollar loophole used exclusively by the banking elite. Welcome to the collapse of the yen carry trade. To understand how one currency mechanism crashes the stock market, you must understand how hedge funds manufacture free money. For decades, the Bank of Japan kept interest rates at zero. This created a massive opportunity for Wall Street billionaires. They borrowed massive amounts of Japanese yen for free. Hedge funds took these borrowed billions, sold them on the foreign exchange market, and converted them into US dollars. Holding billions of dollars, they injected that cash into the American stock market, targeting tech companies yielding massive returns. This is a carry trade. You borrow money in a currency with a zero interest rate and invest in an asset paying a higher yield. It's a money printing machine. Hedge funds keep the profit, paying nothing to borrow capital. Trillions of dollars of Japanese debt secretly held up the foundation of the American stock market. But you cannot manipulate currency forever. Japan experienced severe inflation. The cost of living skyrocketed. The Bank of Japan was forced to raise interest rates, ending the free money era. Instantly, the Japanese yen surged upward against the US dollar. For Wall Street, this was a mathematical nightmare. They borrowed yen but held assets in dollars. Because the yen suddenly became stronger, the real cost of their massive loans multiplied rapidly. They were trapped in a toxic trade. The banks instantly issued massive margin calls. They demanded hedge funds pay back the Japanese yen immediately. But hedge funds didn't have cash lying around. Their money was locked in American tech stocks. To pay back Japanese banks, Wall Street hit the panic button. They violently sold off hundreds of billions of dollars in American stocks all at once. This selling pressure created a shockwave across global markets. The stock market plummeted because billionaires needed cash to cover toxic overseas gambling debts. This is how the matrix operates. Retail investors suddenly see their retirement accounts crash. They panic sell at the bottom, unaware they are collateral damage in a currency war. The financial system is engineered to privatize massive profits for the elite, while socializing devastating losses onto the middle class. When the carry trade works, Wall Street buys yachts. When it collapses, your portfolio takes the hit. To survive, stop reacting to the manufactured panic of corporate media. Stop panic selling high-quality assets just because Wall Street faces a margin call. Understand the mechanics of the matrix, hold strong, and use institutional liquidity crises to buy assets at a massive discount. Stop investing on autopilot. Welcome to Lucas Invests. Hit subscribe, protect your capital, and see you next time.